Greetings from the future of transport, where Tesla is leading the way and electric cars are redefining how we travel the roadways. Visionary businessman Gary has some audacious forecasts for the future. Get ready for an incredible ride as we explore his secret plan to make impossible profits in the next 7 years and profit from the 54 million electric cars that Tesla is expected to sell by 2030. Prepare to be amazed by the thrilling growth rates, mind-blowing forecasts, and amazing possibilities of this revolutionary technology. It's time to fasten your seatbelt and embark with us on this thrilling journey into the future. But before we do so, please click the like and subscribe button. With that said, let's start the conversation by getting to know Gary and why his opinions about Tesla are important. Known for his proficiency in finance and investment management, Gary Black is a well-known investor and the former CEO of Aegon Asset Management. Given that he has held executive roles at a number of significant financial firms such as Janus Capital Group and Goldman Sachs Credit Suisse First Boston, what is his opinion of Tesla? Gary thinks that Tesla will hit amazing figures by 2030. Thus, now would be a good time to examine the covert approach. According to the corporation, by 2030, there will be 3 times as many Teslas shipped annually as there are. Let's get to the point. He estimates that EV adoption will increase from its current 3.4% in 2022 to 6.6% in 2021, and then to 10 by the end of 2022. This is a cautious projection of 10.8 slots. Up until 2030, it will be 16 in 2023, 20 in 2024, and so on. According to his calculations, there will be a multiple of 60 EVs in operation worldwide in 2030. By 2030, predicts that up to 54 electric cars will be on the road worldwide, but he says that number is unlikely given the number of robo-taxis. Tesla just has bars, insurance and power outages exclusive to Tesla. Despite his cautious estimations, his projected annual growth rate of 47% is remarkable because of his exclusive concentration. Tesla's vehicle production. As you may have noticed, Gary's P goes from 61.2 in 2022 to 64 in 2030. And that same year, his stock price peaks at $1,000. I would want to stress again how important it is that we treat Gary carefully. In addition to his work in finance, one of Gary Black's most noteworthy achievements in the industry was his effective CEOship of Janus Capital Group, where he led the company from 2006 to 2009 and significantly increased performance. Gary Black is a well-known analyst on business and money matters who has been on CNBC and Bloomberg TV, among other media outlets. The man is knowledgeable, therefore assuming that in 2030, as Gary projects, Tesla will have an EPS of $42 and a stock price of $1,500. The price to earnings ratio be 6.4. He also projects exceptional annual growth rates of $44 in EV adoption and $45 in deliveries. This is estimates that Tesla's count will increase by 14 by 2023 from 3.1 billion to roughly 3.6 billion are one thing that truly defies logic. It would be absurd if Tesla had to continue diluting in 2030 despite earning over $200 billion in net profits. If you want to invest $200 billion annually, you should reduce the amount of buybacks at the same $1,500 price per share in 2030. As a result of inflation, the market cap will have increased to roughly $4 trillion. 2023 will be comparable. Black believes that if we receive the $552 a share, the price of Tesla shares will soon reach $550. 69p has a market capitalization of over $2 trillion, which is more than twice as much as the present market cap of $600 billion. In the following 6 to 12 months, Gary Black projects that the stock might reach a price target of 69p in 2023. This sounds sense, but let's talk about the stock price for 2024. Given that Tesla's sole business in 2025 will be the production of automobiles, 60 would be equivalent to 616.69 or 600 per share. Market valuation of $2.5 trillion and a net income of $45 million are both attainable targets. The fact that their income increased by $20 billion from $46 billion to $66 billion in 2026 with a 45 PE means that the company's market cap will be close to $3 trillion using a P of 40. If they're making so much money and crushing earnings after, say, a year, the would drop significantly. I arrive at an $832 price per share, which is absurd given that that is a semi-automatic 4x4 vehicle on its own. Furthermore, dividing 25 through 3 for Tesla makes no sense, but you guys know me, so we're being cautious. Keep in mind that Gary's prediction only takes into account the Tesla vehicle manufacturing sector. What would happen if we added the true valuation propositions of Tesla FSD? As you may expect, the price of Tesla insurance, energy, and similar products skyrockets. We'll discuss it in a moment, but first, let's discuss who else believes Gary is a Tesla bull. As one of the company's biggest investors, Kathy Woods of ARK Investments has been bullish on Tesla, citing the company's potential to disrupt a number of industries, including energy, transportation, and autonomous driving. However, early on, Munger, the vice chairman of Berkshire Hathaway and a longtime business partner of Warren Buffett, has been critical of Tesla and its CEO Elon Musk, calling Musk asinine and criticizing Tesla's high evaluation. In May 2021, when asked about Tesla during the Additionally, Munger attacked Tesla for relying too much on government grants and incentives, claiming that Elon Musk should get more credit. He may be a smart guy, but I don't think the auto industry is simple, and I believe Tesla has some inherent growth constraints, even with government support. As with any investment, there are always going to be differing viewpoints and ideas. Thus, other investors may have different opinions about Tesla. While some might consider Tesla to be hazardous or overpriced, others might view it as a solid long-term investment prospect. It is imperative for investors to conduct independent research and make well-informed decisions that align with their investing objectives and risk tolerance. It's now time to add some FSD forecasts to Gary's prediction and see what occurs. I'm excited about this since in 2022, the average cost to you will be $12,500 due to the rising price of FSD. Actually, they increased the cost to $15,000. Many bears forecast that by 2030, that will be worth barely $29,000. In 2020, purchasing an FSD costs $8,000. By the conclusion of the 10th year, the original $6,000 had been raised to an astounding $15,000. Based on historical trends, I predict a fourfold increase from the current levels. By 2022, we can assume that the FSD profit margin will exceed $1.2 billion, with sales rising by 2% annually from their current level of about $2.5 billion. An additional $2 billion will be added, bringing the total net income to $15 billion or $303 per share at a P of 61. Fascinatingly, the price per share fluctuates between $602 and $729. The value of vehicles has increased from $10.50 to $20.30 per share. And with the addition of FSD, that number will rise by another $230. Seriously, that's amazing. In a minute or two, this place will be completely out of control. If the stock price is true, you will have a ridiculous 500 gain by the year 2030. The stock price will reach $12.82 by the year 2030, and the company's market valuation would be close to $6 trillion. People, I have invested all of my money in Tesla stock. I had to sell the moon to pay for the shares I bought yesterday and today. I wonder how well this will hold up over time. I don't know about you, but I'm feeling hopeful. Investors are unsure about the future of Tesla stock in the new year despite this uncertainty. Historically, Tesla has had strong stock performance, especially during its remarkable surge from mid-2019 to late 2021. The stock fell to a bear market bottom of 100.84 in early January, but it has since recovered by almost 93. However, Tesla released conflicting numbers for the fourth quarter of the previous year with greater than expected earnings, but lower than projected revenue. Musk's positive forecast for 2023 contributed to the stock's sustained rise in revenue. If you enjoy the video, please hit the like and subscribe buttons. I'll see you in the next one. Never count Musk out. Do you agree with Gary Black's assessment? There's a logic to it.